Friends, welcome. Our today's topic is basic principles governing an audit. So various concepts we have already understood. And when an audit is conducted, or you can say when a statutory audit is conducted, an auditor is expected to follow certain basic principles. And throughout the course of audit, these basic principles needs to be followed. So let us quickly look at the screen. As you can see, when you talk about basic principles governing an audit, you can identify these are the 9 basic principles which needs to be maintained. First one is here, integrity, objectivity, and independence. This is basic principle number 1. We'll understand what is that. How during the course of an audit, it is expected to maintain integrity, objectivity, and independence. Second basic principle is confidentiality. Third one is skill and competence. Fourth one is work performed by others. We'll understand in certain audit situations, work may be performed by some other people, how to deal with that situation. Then next principle is about documentation. Next principle is audit planning. Then audit evidence collection. Then accounting system and internal control. Finally, audit conclusions and reporting. If you count how many basic principles are there, when you talk about this basic principle, can you tell me how many?
So 9.
9. So this 9 basic principle we need to understand first. Okay. Now let us see. First one is integrity, objectivity, and independence. So that means the entire audit work has to be carried out in an integrated manner. That means even when no one is watching, still the auditor should do the right thing. Okay, so the audit process is governed by standards, and the professionals who conduct the audit is governed by their own code of ethics. So that needs to be followed. Even if there is no supervisor, still audit has to be conducted in proper manner. That is what when we say integrity. Objectivity means when audit evidences are collected or they're evaluated to substantiate transaction. So auditors should be able to take objective decision. That decision should not be subjective. That means, let us say for one client in a particular situation, or in one particular situation, let us say auditor is giving an qualified opinion. Similar situation again coming, he should give also a qualified opinion. That means he is objectively evaluating the situation. But let us say one particular client, one type of decision, another particular client, another type of decision auditor is taking. It will say auditor is not an the auditor is not looking at the things objectively. Rather, his decisions are quite subjective. Understood the meaning? Okay. Okay. Let us say auditor has decided that an error of more than 5,000 rupees is substantial, or it's a material error. You will report it. Okay. It is not that for manager X is committing a mistake of 5,000 rupees is reporting, and manager Y is committing a similar mistake is not reporting. For one case, he is saying it is material, another case it is saying it is not material. That means the auditor's decisions or conclusions are subjective. That should not be there. Right. So throughout the course of audit, the integrity, objectivity, and more importantly, independence needs to be maintained. Okay. Auditor need to give his independent opinion. That means auditor is not expected to have some other kind of interest with the company, with the entity. Right. His decisions or his conclusions should not be affected by any other his interest or by his involvement with the company. That should not be there. Auditor is expected to behave independently. For example, let us say auditor is auditing a bank and he himself has borrowed money from that bank. Can you call that auditor independent? He's not independent because he is having some financial interest with the bank. Are you getting?
Yes, sir.
Right. Now come to the second basic principle. Second one, can you read it for the second one?
confidentiality, not to disclose without specific authority or unless there is legal or professional duty to disclose.
Confidentiality needs to be maintained throughout the audit. But in three situations, as you can see, auditor can disclose. Auditors should not disclose anything. Let's say auditor handles or auditor deals with very confidential information of the client. When you'll be reading company audit, you will understand the auditor has access to all books of accounts, records of the company, whether financial or otherwise also. Suppose auditor can see all the board minutes of the company. So auditor can come to know what is the plan of the company, what kind of decisions the directors are taking. So some of the decisions might be highly confidential. The auditor is not expected to disclose those information without specific authority. That means if auditor has got some specific authority to disclose something, then he can do it. But he should not do it without specific authority. Or unless there is a legal obligation. Let's say law requires him to disclose something. Law requires that in case auditor finds that there is some fraud which has been committed by the company and the amount of fraud is exceeding 1 crore, auditor has to directly report to the central government. Understood the situation? Now, this is the situation when law requires, auditor has to disclose. Confidentiality principle will not be applicable here because law requires to disclose that promptly. Okay. Or if it is a professional duty to disclose. So many times what happens, auditors audit process is subject to peer review or maybe is to be verified by some other authorities. Sometimes auditors peer or some auditor reviews the audit process, or sometimes let us say authorities like SEBI, they also verify the process of auditing. At that time, auditor might have to disclose some information. Okay, so what is that? That is professional obligation. So in three situations, auditor may disclose the client's information. Can you recall what are the situations? Number one, when there is specific authority, the client has specifically authorized the auditor to disclose something. Got it? Number two, when there is a legal obligation, there is a legal requirement, law requires the auditor to disclose something. And number three, when there is a professional obligation. So barring these three situations, auditor needs to maintain a high degree of confidentiality. Did you understand this?
Excuse me, sir. For a specific authority, when might the client authorize the auditor to disclose their information? Like in what situations?
Yeah, in certain situations, let us say auditor wants that he needs to disclose this thing with the client. So at that time, auditor may obtain a specific authority from the client. So I'll show you in some other time, some other situation also. So many times we also obtain a specific that authority from the client, most of the cases, to share that information in the classroom for academic purpose. So many times, whenever practically I use the audit engagement letter, I put a clause that these things, that means some of the informations will be disclosed in the class for academic purpose. So with that, I'll be able to disclose that confidential information with you. Otherwise, we are not supposed to do that. Are you getting? So this is, I'm telling you one situation. Got it? So that is a specific authority client is giving that you can share this information. But for a specific purpose, not for everything, not to the competitor. Only for academic purpose that can be shared. Okay. Are you getting?
Yes, sir.
Okay, so that is an example. So like this, some other situation may come. Let us say auditor wants to use the data for some research purpose, for his own research. Then also he can obtain specific authority from the client. So, but apart these are the only three situations which is specific, not anything beyond that. In no other situation, auditor is supposed to disclose client information. Is it clear to you? Third basic principle. Can you read it?
Skills and competence, professional care qualification, continuing awareness programs, ICAI pronouncement, regulation and statutory requirement.
Okay, these are only bullet points, so we need to elaborate this thing. Whenever an audit is carried out, it has to be carried out with proper skill and competence. Okay, if the auditor is not skillful or is incompetent to audit a particular transaction or a particular account balance, then he's not expected to do the audit. So audit has to be carried out with professional care, with proper qualification. Let us say someone is doing a concurrent audit of a bank. It requires a specific qualification, or somebody is doing like the information system audit, ISA audit, we call it. Then it requires an additional qualification. Okay, so those kind of work has to be handled with proper qualification. A person who is not qualified or who is not having experience in that field, he should not do that kind of thing. If somebody does it, that means auditing is not conducted with proper skill and competence. That person doesn't have skill and competence, but he's doing that. And to attain this skill and competence, the various professional institutes provide continuous awareness programs. That programs needs to be attended. And the professional institutes also issued some pronouncements from time to time. Let us say how the bank audit will be conducted in this financial year. So institute issues some guidelines, some pronouncement. So that needs to be followed. Also, regulators issue this kind of guidelines. Sometimes law also changes. So statute changes. A statute provides some requirements. That also has to be done. Okay, so the third basic principle is that with skill and competence, audit needs to be conducted. Right? When I say basic principles, that means it has to be always followed. Not only followed, auditor has to keep evidence that he has followed these basic principles. Point number 4. Can you read it?
Work performed by others continues to be responsible for forming and expressing his opinion on financial information.
Wait a minute. One by one we'll see. So now friends, try to appreciate that many times auditor relies on the work which is performed by others. Okay, it is not possible that entire auditing he has to do. Number one, he has to rely on his employees. Sometimes on some specific areas, he has to rely on some other auditors. And in some other situation, he needs to, or he might have to rely on certain experts. Okay, for example, let us say I am the auditor, my team is there. The team may consist of qualified people or semi-qualified people or unqualified people. So many times we have to rely on. Similarly, let us say there is some specific area where we need an expert opinion. Okay, for example, for arriving at the liability under employee benefit, I may need an actuarial valuation. Okay, so on the basis of actuarial valuation, so I may really audit that whether the employee benefit liability is provided by the entity is correct or not. So I may employ an actuary for that purpose. Actuary is an expert. He is giving an opinion. Is it not? So this is a situation you see work performed by others, but I'm using it for my audit. Right? Third situation, you see, let us say in case of you are auditor of a bank, you are the central auditor, final balance sheet you have to sign. Okay, the bank has got so many branches. It's not practically possible for the auditor to visit all the branches. What happens? The branch audits are conducted by various auditors. Similarly, there are branches in foreign countries. So those are audited by those local auditors. And finally, those audit reports and the audited financial statements are consolidated. And the central auditor expresses an opinion on that. For doing this thing, is he not relying on other auditors? The central auditor is relying on the branch auditors. be on the foreign auditors also. So this is again one more situation you see. Work is performed by others in the process of auditing. Got it?
Sir,
Yes, please.
sir, when you are taking the opinion of the expert,
Yes.
sir, will he be considered under the contract regarding the audit?
It is not a contract for audit. Audit contract cannot be subcontracted. It's not like this. But in certain situation, the auditor himself is not an expert. He cannot give his judgment. So he uses some other expert, okay, who is qualified or has necessary experience to give his opinion. So I may appoint one, let us say actuary, to value that the gratuity liability has been properly provided or not. Leave encashment liability has been properly provided or not. Because he is an expert, he can judge. As an auditor, I can see whether figures are correct or not. But let us say, on the basis, how can I know that what is the life, what is the expected life of different people? In every year, how many people will die? Okay, how many people will leave the job? What is the probability of all these things? Because on that basis, we have to provide this liability. Are you getting? So this is a specialized area where an actuary, in which an actuary is an expert, he can do it. Okay, understood. So here I am using the services of an expert, but auditing is not subcontract. Auditing assignment cannot be delegated to somebody else. But expert services, yes, that can be used. Is it clear to you?
Sir, you have to use the opinion of the expert by following the rules of the authority, sir. You have to take the permission of the authority for that.
You have to take the permission of authority. That's
Yes,
what
sir.
said. Which
Yes,
authority's permission you are going to take?
Sir, whose company's accounts you are being auditing.
Mhm.
So their permission has to be taken to take the opinion.
No. Okay, so you are giving information. As an auditor, you have access to the records. So you are giving information and you are using the services of expert. Sometimes if you feel, you may take that permission. Mind you, the expert is not auditing. Expert is on the basis of information provided to you, provided by you. She is giving an opinion. That's it. Okay, you may have, when you are giving audit engagement letter to your client or to the entity, you may disclose this, that you are going to use the services of an expert. When you have informed, that means the client has agreed that you may use the services of an expert. Is it clear to you?
Yes, sir.
Okay, let's move to the next point. Now, our main point was that even if I'm using the services of an expert, the fact remains that auditor continues to be responsible for forming and expressing an opinion on the financial statement. Friends, you see, I'm using the services of an expert. I'm using the services of another qualified person. I'm using the services of my branch auditors, or using the services of foreign auditors, or using the services of my employees, doesn't matter. But ultimately, who is responsible? It is the auditor. Auditor continues to be responsible for his expression on for expressing opinion on his financial statement. Later on, auditor cannot say that, you see, that opinion was wrong because I have relied on somebody else. Okay, whether you are relying on somebody else or not, that is your problem. That is the auditor's problem. Okay, but auditor will be continuing to be held responsible for his opinion. But his opinion, it is only the auditor who will be held responsible. He is entitled to rely on others, but responsibility cannot be shared. That is the main point. Okay. Got it?
Yes, sir.
Right. I repeat, continues to be responsible for forming and expressing his opinion on the financial information. Now, second point, under the work performed by others, can you read it?
entitled to rely provided adequate skills and care and not aware of any reason not to rely.
Auditor can rely, auditor can use the services provided. The service, the people or the expert who are providing these services, they have adequate skill and care. An auditor has to handle it with adequate skill and care. An auditor is not aware of any reasons but not to rely. Okay, if auditor is aware of some reasons, that auditor believes that he should not rely upon this expert because this expert has got some hidden agenda. Okay, the expert has got some different kind of relationship with the entity. In that case, auditor should not rely. Otherwise, he should rely on the other experts. Okay, please read it as rely. Okay, it's in fact rely. Are you getting it? Auditor is entitled to rely on the expert or others, provided he has done it with adequate skill and care, and he is not aware of any reason not to rely. Okay. Now, next point under work performed by others.
Direct, supervise, and review work delegated to assistant.
Let us say auditor is relying on the work of the assistant. But what is his responsibility? Principle-wise, his responsibility is to give direction. First, he will tell the assistant how audit is to be done, and also supervise and review the work delegated to assistants. Just like that, he cannot rely or he cannot use the services of assistant. He is expected to give direction, supervise, and review. Understood? Next
Yes,
point.
sir.
Next point. Next point, please read it.
Expressly state the fact of reliance in case of any branch audit.
This is in case of a branch audit. If auditor is relying on the report of some branch auditor, he has to expressly state that I have relied on the branch auditors. I have not audited those things. Okay, he has to expressly state the fact of reliance. Okay, I'm showing you some example. You see, here you see, this is the audit report of State Bank of India. Are you able to see it? This is the auditor's opinion. It says we have audited the accompanying standalone financial statements of State Bank of India as at March 31st, 2020. You can see. Now you see the central office, this head office, administration, business, all these things. Now you see, second point, you see 9,135 Indian branches audited by respective statutory branch auditors. That means this main auditor has not audited this. He has relied on branch auditors. How many branches? 9,135. They have not audited. Okay, they have audited the central office and 42 branches they themselves have audited. Okay, these are audited by whom? Branch auditors. So they are relying on that. And they have expressly stating that these are the things we have not audited. It is a branch auditors who have audited that. And you see, 34 foreign branches audited by respective local auditors. That means these are the foreign branches that also we have not audited. They are local auditors, they have audited this. Did you see how disclosures are made? It has been expressly stated that we have relied upon others. Got it? Okay. Now, next part you say.
Obtain reasonable assurance that work performed by the other auditors, experts are adequate.
So this is one more issue. Even if I'm using the services of other auditors or experts, So auditor also needs to obtain a reasonable assurance that their work is adequate. For example, I'm using the services of export. I can verify the export has, what are the assumptions export has taken. Okay, I may not be able to comment on the expert's opinion, but I may be able to comment on the assumptions taken by the expert. Let us say these assumptions are unrealistic, then I may not rely on that particular report and that particular opinion. So auditor needs to obtain reasonable assurance that the work performed by others are adequate. For example, let us say branch auditor has done some audit. So I need to review that. As an auditor, I need to verify whether the branch auditor has done proper work or not. Okay, so that is also one basic principle which needs to be followed. Got it?
So once again, please.
Yes. This point what we are discussing is about auditor is expected to obtain reasonable assurance that the work performed by other auditors or experts are adequate. So just like that, that means blindly I am not expected to rely on the work performed by others. So as an auditor, I need to obtain reasonable assurance. I need to be reasonably assured that the other auditors and experts have done their work properly. How will we be able to get reasonable assurance that others or the experts have done their work properly? So for expert, you can review their report, review their assumptions. If you find something abnormal, okay, then you can say, okay, this particular report is not reliable. For example, let us say you do not know how to, or you are not an expert to compute, to do the actual valuation of employee benefit liability. Okay, it requires a kind of expertise which actuary is having. And actuary has given you a report that, okay, this was, should have been provided as liability. Will you accept it? You may accept it, but here the principle says don't accept it blindly. Because you need to ensure and need to be reasonably assured that the actuary has done the work properly. So you may go through its assumptions. Suppose assumptions it is taken, one of the assumptions you find that the inflation rate is taken as 20%. That is not realistic. That much of inflation we do not have. If inflation with that inflation rate is actually liability has been computed, that figures are not reliable. Okay, are you getting? Similarly,
Yes,
it's a
sir.
branch. Are you getting it?
Yes, sir.
Okay. Let us say similarly, the stock verification has been done by a branch. From any company, stock verification is done by branch. But you see, there is no working paper. You may ask for the working paper. Show me the raw paper where you have shown the stock. Sometimes, because most of the cases, physical verification of stock is done at the year end. So many times what we do, many times auditor asks for a, let us say, video record. Show us that actually stock has been verified. That gives us a reasonable assurance that stocks are actually verified. Are you getting? Got it?
Yes, sir.
So that is the principle, that often reasonable assurance, often some assurance that the work performed by other auditors and experts are adequate. They are adequately doing it. Point number 5. Please read it.
Documentation, evidence that the audit has to be carried out in accordance with the basic principles.
We are learning various basic principles, you see. But one important thing is that auditor needs to document. Then actually work has been conducted in an integrated, objective, and independent way. Confidentiality has been maintained. Work has been carried out with necessary skill and competence. And when work has been performed by others, reasonable assurance has been obtained that experts' work is adequate or others' work are adequate, like this. So these documentations are important. Auditor need to document this. Okay, now let us move to the, is it clear to you?
Yes, sir.
Okay. Next basic principle is on planning. Audit planning, of course, separately we'll be learning in detail with reference to the auditing standards and auditing. Now, at a basic level, let us understand. This is again one more important principle, planning, audit planning. Okay, to conduct an effective audit, an efficient and timely manner, it is necessary to have an audit plan. And this audit planning is not a something like template kind of thing. It's not same for all business. It has to be drafted specifically. It has to be designed specifically for a particular entity. And it has to be based on the knowledge of client's business. Therefore, it is first of all, it is important to understand the client business. Acquire knowledge about client business. Then try to establish some reliance on the internal control system, whether it is reliable or not. Then you draw an audit program, then coordinate the activities. So it's audit planning is not a small thing. Okay, what the planning should cover? It should cover point A. Will you read it?
Acquiring knowledge of clients, accounting system, policies, and internal control procedure.
So first, let us say you have to audit an company, audit the financial statement of the company. You need to acquire knowledge of the client's accounting system. Okay, how accounting is conducted, how accounting is done. So you need to practically document that, let us say, how transactions are originated, how vouchers are entered into, how these vouchers are fed in the system, who approves that voucher, how voucher feeding screen looks like, how ledger looks like. Okay, all these things needs to be documented. You may take screenshots and keep it in your document file. This is how voucher moves, how vouchers are approved, how, let's say, a company is having various units and various branches, how all these accounts are consolidated, how consolidated financial statements are prepared, how provisions are made. This is about understanding accounting system. Okay, so first, some time needs to be invested to understand the accounting system. Then only you can make audit plan. Okay, and not only accounting system, you have to also understand various policies. For example, you see knowledge of client's accounting system and policies. So many entities have their own policy. They have purchase manual, purchase policies. They have marketing policies. Okay, they have, let us say, capital asset purchase policies. So I need to, or the auditor need to understand all these policies. Okay, let us say HR management policies. And also they have own internal control procedures, that how a transaction will happen or how a particular decision has to be taken. There is an internal control procedure. Let us say to purchase something, a procedure must have been divided and must be there in many entities. Okay, so that is the internal control mechanism. Suppose any purchase above 5 lakh rupees has to be approved by purchase committee. Let us say this is the kind of system. If this system is a part of internal control, so that those major purchases or major purchase decision has to be taken by a committee, not by an individual. So that is a part of internal control procedure or not? So as an auditor, you need to acquire knowledge about accounting system, policies, and internal control procedures. Got it? Yes or no?
Yes, sir.
Point B. What is point B? Please read it out.
Establishing expected degree of reliance to be placed on internal control.
Next thing is that having understood this the internal control procedure and this the accounting system and these are the various policies, auditor needs to establish a degree of reliance, meaning whether auditor can rely on that or not. How much reliance is to be placed on internal controls? Friends, try to remember it is entirely the responsibility of the management to ensure that adequate internal controls are there. An auditor is entitled to rely on, but how much reliance has to be placed? It's a judgment. Auditor has to apply his mind whether he'll rely on. Okay, let us say, for example, auditor sees, or there is internal policy says that a voucher cannot be entered into unless it is approved by an employee above a particular level. Let us say this is the kind of thing. An auditor has seen, tested some transactions, it found there are some vouchers which are already passed without, let us say, approval. What does it mean? That means internal control is there, but that is not followed. That means it is inadequate. Okay, suppose internal control is there, no one can take advance unless his previous advances are set. But auditor practically tested some transaction, it is found that, okay, this is happening. Previous advances are not settled, but still people are taking advance. That means internal control is weak. So somehow for those advanced verification, reliance cannot be placed on internal control system if they are not reliable. Okay. Suppose internal control says any item we purchase, it has to be routed through stores. First, you will go to the stores, then it will be issued from the stores. But you are finding practically some examples that some managers are purchasing something directly without routing it through stores. So these are some examples of failure of internal control system, which indicates that internal control systems are weak. An auditor cannot place reliance on those kind of systems. Are you getting me?
Yes, sir.
Okay, auditor has to decide that how much reliance has to be placed. Point C. What is point number C?
Determining and programming the nature, timing, and extent of auditing procedure.
Friends, what is audit procedures? Again, we'll be learning at a later stage. Today, I'll be briefly telling you what are these audit procedures to understand this thing. Yeah, audit procedures I'm telling you after some time, not right now. Now, auditor needs to decide what is the nature, timing, and extent of audit procedure has to be followed. Which audit procedure has to be followed? Because now auditor has already understood what is the internal control system, what is the accounting system, what are the policies. Auditor has already decided how much reliance has to be placed. Now he has to plan for the audit, or he has to program for it. While programming, he has to decide which method has to be applied. What is the nature of audit procedure has to be followed. He may decide that I will vouch this transaction, I will do physical verification. So what is to be done? That's the nature. And timing, when that is to be done. Which it will be done today, or in the month of March, or in the month of January. For how many days I have to check. So nature, timing, and extent of audit procedure. To what extent that audit procedure will be applied? Is it going to be applied on 100% of transactions, or on 50% of transactions, or selectively on some high value transaction this will be applied? So that is an example of audit plan. Okay. So auditor needs to decide and program the nature, timing, and extent of audit procedures. Did you understand? Audit procedures, what is the meaning of that? I'll be explaining. But did you understand this concept? Yes or no?
Yes, sir.
Point D is the coordinating the work performed by others. Now, audit is to be conducted by a team. Okay, by team. So many people are involved. So their work needs to be coordinated. Who is going to report to whom, and finally how the observations will be consolidated. So that has to be decided. That needs to be coordinated. Okay, then only finally auditor will be able to express an opinion on the basis of evidences collected by various team members. Suppose 20 members are involved in audit. Everybody might be having some audit observations. Those needs to be consolidated in proper manner so that auditor can form an opinion on those observations. And what is the impact of those observations on the truth and fairness of financial statement, auditor should be able to form that opinion. Okay, and on this basis, this audit planning has to be developed, and this planning needs to be further developed and revised during the course of audit. When actual audit happens, the audit planning needs to be revised. Okay, so if I summarize, first we have to do acquire knowledge, then establish reliance. Third one is draw audit program, then coordinate the activities. Can you remember the steps involved in audit planning? Can you tell me? Can you tell me these 4 steps briefly? What auditor is supposed to do? First step, he has to acquire knowledge. Step 2,
Establish reliance.
step 3,
Program.
yeah, he has to form the audit program. And 4th,
Coordinate.
Coordinating the work.
practically, let me show you an example how it is to be done. And if you will be given an audit situation, you have to decide how you are going to proceed. Okay, how you are going to acquire knowledge. Okay, how you are going to place reliance, how to develop audit program, and how you'll be going to coordinate. For your easy understanding, let me try to give you, try to share some practical things with you, practical documents. First, we need to acquire knowledge. Okay, right? That is the first one.
Yes.
Okay, let us say to acquiring knowledge means you need to understand the accounting system, various policies, procedures. You can ask for those documents and ask the client, give me your various accounting policies. What is the accounting system, internal control system? You can ask all these things. I'm showing you some file about system understanding of a particular company. Yeah, let me just give me 1 minute. I'll say. First, I'm showing you some information about yeah, I think you are able to see data. This is about system understanding. Okay, suppose one may collect data of a company. Suppose a company is having various offices at different places, corporate office, marketing office. One need to understand how many units they are having. Okay, this is an public sector company. You can see it. One need to understand how many units they have, how many offices they have, where they're located. So many information one can collect from the client. What are the activities they do in different places? Those information can be collected. Then there are various ratios also one can, what is their operating margin, net profit margin, return on capital employed. One can have some historical data, some other analytical data one can see, sales trend one can see, profit trend one can see, physical production in different units one can see the data. Financial performance of past years one can see. Now coming to accounting system understanding, how accounting has to be made, in how many places accounting transactions are recorded. Okay, how the accounting codes are designed. Different codes are there, so that what is the meaning of this code, one can understand. And what is the financial accounting system, how trial balance is generated. This one can draw a flow chart to understand that how trial balances are generated, how data are stored. This is about understanding the business of the client. Okay, if you go further, that what kind of accounting treatment happens, but how financials, how different type of financial statements are prepared, trial balance and consolidated trial balances are prepared. What is the process step by step, how bills are recorded in transactions. It's a voucher generation, how voucher is generated in the program. So this is in fact, this is a note for understanding the client's activity. This is how this annexure shows. These are the voucher screens. If you do, how a screen will look like. Okay, various items, how they are entered into. Okay, how voucher entries are made, step by step process. These are the accounting screens, how entries are made. Are you able to see it?
Yes.
How their ledger, their books of account looks like. Okay, transactions, how it is entered, how adjustments are made to the transaction. How segment reports are prepared. Understood. How final transactions are grouped, schedules are formed, and financial statements are prepared. This gives you some understanding that in an auditing situation, first, what is necessary, that you need to understand the system, understand the accounting system, understand the policies procedure, and understand the internal control system. How you'll be able to understand? Through discussion, through collection of data, papers, and you need to note it down. Because after that only you'll be able to form an opinion how much reliance has to be placed. Okay, what kind of control they're having. After understanding, you'll be able to form that opinion. Isn't it? Okay. Now one more paper also I'm sharing. Just a minute. Let me go back. Some other paper I will share so that you can have some idea. I told you that reliance, how much reliance has to be placed. Okay, here in fact, let me show you. Are you able to see analysis of risk? Are you able to see? Okay. So now what the auditor is doing, he's seeing, let us say, analyzing some transactions, review of some transactions. Okay. And it is finding out some risk, some remarks. Okay, let us say power purchase agreement, there is some dispute it is found. So earlier you see he had planned, it's a low risk area. He has selected some samples. Now he is planning to do it 100%. So depending upon the reliance, he may modify the audit program. Okay. In some cases, you may find, okay, risk is at a lower level. I will also show you how risk is analyzed. One more paper, let me share with you. Yeah, I think this will be better for you. You can see here auditor has analyzed that in which area is high risk area, which area is low risk area, which risk is moderate area, safe. Accordingly, he can do audit planning. Okay, once he has identified that this area errors are low, errors are more, he can concentrate on some other areas which are important. So like this, auditor tries to place reliance on the internal control system, and in this process makes a risk assessment that which are the high risk area, which are the low risk area, which are the safe areas. Understood? Then on that basis, auditor needs to plan. Okay, plan means what audit procedures to be applied, to what extent, what is the nature, extent, and timing of the procedure. So all these things forms a part of audit program. I don't know whether I had shown you earlier in the audit program. Anyway, I'm showing it once again. See an example of audit program. Are you able to see the audit program? Detailed audit program? Yes or no?
No, sir.
Are you able to see it?
No, sir.
No, sir.
Oh, earlier files you are seeing, no?
Yes, sir.
Okay. Just give me a moment. Yeah, I can show you now. Yeah, now I think you're able to see it. Okay.
Yes, sir.
You see, this is the timing. This means the date, serial number, when it has to be started, which is the area to be covered, extent of checking. Okay, what is the extent of checks? So the methodology means this is the nature of audit procedure has to be applied. Okay, and this is a part of the program. In fact, who will do it, who will verify it, that's a different thing. So this is the complete audit program. It talks about the nature, timing, and extent of audit procedures to be applied. Okay. Suppose you see, this is the time from 23rd April to 27th April, investment has to be verified. To what extent? 100%. Okay, and what is the audit procedure? Obtain the list of investment, physical verification, compare it with the investment register, authorization of investment, like this. And somebody has to verify it, and auditor has to review it, and finally, it has to be kept in a particular file. Okay. Understood. This is the long list of audit. This is the detailed audit program. It contains almost everything, all kind of financial transactions, how this is to be audited. This program explains everything. Got an idea? Okay. Next, one more thing. Since work has to be carried out by various people, those work needs to be coordinated. Now let me try to show you how work can be coordinated. Different people will be involved, so you need to prepare a coordination chart. Now have a look at this. So there is an audit in charge. Various group of people are auditing in different areas. Okay. And finally, you see ground level, some people are working. They will be reporting to someone. Finally, at different stages, it will finally appear to the audit in charge, and he will form an opinion. Staff coordination chart. Now you have understood that it requires a detailed planning to cover all these things. Okay, got it?
Yes, sir.
Well, That's what I told you. Acquiring knowledge of the client accounting system, establishing degree of reliance, determining the nature, timing, and extent of procedure, and coordinating the work performed by others. And finally, one more thing. And finally, if you see what is written, needs to be further developed and revised during the course of audit. That means this planning is not permanent. It's not a static plan. Right. What is to be done? It needs to be revised. If auditor finds that on the basis of his observation, auditor decides to revise it, auditor feels that plan needs to be revised, is to do it. So let me show you an example how plans get revised. Just give me 1 second again. Okay. Yeah, this is what I was showing, in fact, how plans are revised. So 1 second, I will only show you. You see, as I was telling you, originally it was a low risk area. Okay. Extent of verification as per revised plan is 100%. There are some areas. Original plan was different and revised plan 100% verification has to be done. Okay. Original plan here you see it was plan was to do a select sample verification. I'm selected item. Now here it was only to test it, but now it has extended to 100%. Right. Now you have understood when I say basic principle has to be followed and that has to be documented. This is what document is. You should have document that actually basic principle has been followed during the course of audit. Is it clear to you?
Yes.
Okay, so now after that, I just told you I'll be explaining you what is or audit evidences. I'll be talking about that thing and what is the audit procedures. We'll just take a short break and then we'll catch up. Friends, welcome back. So, as you know, we are discussing about audit planning. So, planning is a continuous process. On the basis of auditor's experience, that needs to be further developed and revised. All these things we have understood. And I told you one more thing. What are these audit procedures we'll be discussing at later stages. Now, next is, or you can say, next principle of governing an audit deals with audit evidence. So as you know, the auditor forms an opinion and he expresses that opinion on the financial statement. That opinion is, of course, is about truth and fairness of the financial statement. But how an auditor can express that opinion or form an opinion? He has to express that opinion or he has to form that opinion on the only when he is having sufficient and appropriate evidence for that. Okay, these two words are important for us. That means number one, efficient and evidence should be sufficient and evidence should be appropriate. Rather, later on, we'll be learning audit standards and auditing, which deals with audit evidence. We'll understand that when we talk about sufficiency, we're talking about the quantity, and when we talk about appropriateness, that basically we are referring it to the quality of the audit evidence. Okay, so auditors should be having sufficient number of evidence and appropriate evidences to justify his opinion. Now, how auditor will be collecting those evidences? Through performance of certain audit procedures. And these audit procedures, therefore, at this stage, we need to understand what are these audit procedures. As you can see, this point number A and B, it talks about basically two types of audit procedures are discussed here. One is, what is A? Can you read it? point A, just read the heading. What is the audit procedure?
Compliance procedure.
Compliance procedure. And what is point B? Substantive procedure. These are taken classification of audit procedure. In fact, when you will learning audit strategy, it will be more clear to you. If you look at this picture at this stage, you can understand that these are some procedures which an auditor needs to perform. First, can you read it? What is there in this book, in this particular oval set? Can you read it? Risk assessment procedure. So what happens before starting the audit? Auditor applies this procedure to assess the risk. What is the risk involved in that audit? Risk involved in the audit means what is the risk of financial statement being materially misstated, or risk of giving an inappropriate audit opinion. Okay, so these are the risks. Okay, so auditor tries to assess that. Is there any chance that financial statement will be materially misstated? Is there any chance that auditor will be giving an inappropriate opinion? That means actually he should have given an adverse opinion, but by mistake it has given a unmodified opinion. Right. So that is those procedures which auditor applies to assess that. It's called as risk assessment procedure. And having applied that, auditor after that will be applying this audit procedure. On the basis of its risk assessment, we will develop the audit procedure. And audit procedure, as you are saying, can be of two types. One is one group of procedures are referred to as compliance procedure, others one as substantive procedure. Compliance procedure means actually the rules and regulations are complied with. So auditor tests that. Meaning, the auditor sees that the internal controls are in effect. What is compliance procedure? If you read this, you can see what is compliance procedure if you just read it. Tests designed to obtain reasonable assurance that the internal controls on which audit reliance is to be placed are in effect. Auditor relies on this internal control. Auditor places reliance on this internal control system. But in this process, auditor judges that actually those internal controls are effective. Suppose auditor realizes that all the vouchers are approved by an appropriate authority. So he will test that compliance. Actually, all the vouchers are approved or not. If auditor finds out some examples and vouchers are not approved, but still they are entered in the books of account, then auditor loses the confidence. Auditor in that situation is not expected to put reliance on this internal control system because it is not effective. Control system is there, it is not effective. Understood? When I say compliance procedure. So in every audit, auditor has to apply some compliance procedure and also some substantive procedure. What is substantive procedure? Completeness and accuracy and validity of data. That means the financial information, financial data is complete, accurate, and valid. And this substantive procedure can be of two types. One is tests of details. Second is analytical procedures. And the test of details, as you can see, again of two types. That means tests of transactions, that is vouching. Second is tests of balances, that is verifications. The transactions, are normally reflected in the statement of profit and loss, and the balances are reflected in the balance sheet are shown in the balance sheets. Okay, so auditor applies various procedures. For example, for transaction checking, auditor may do vouching. For balance checking, auditor may do verification. It may be physical verification of asset. It may be verification of debtor balances. It may be balance confirmation certificate from the bank. So these are the procedures for test of balances. Right? Are you getting me? So if you want to understand what are these substantive procedures, so as for standards and auditing, substantive procedures are designed to obtain evidence as to completeness, accuracy, and validity of data produced by accounting system. Right. So they are of two types, as you know, test of detail of transactions and balances. and analysis of significant ratios, trends, including resulting inquiry of unusual fluctuations and items. For example, when you're coming to this part, analytical procedure, auditor may try to find out what is the, let's say, gross profit margin, what is gross profit ratio, what is net profit ratio. If it is finding something abnormal, so normally, let us say last year GP ratio was 40%, but this time it is 20%. Auditor needs to analyze that and need to find out what is the reason for that. That is again a part of application of substantive procedure. Okay, and why all these audit procedures are applied in an audit scenario? Only to collect audit evidences. Through application of this procedure, auditor collect evidences. For example, auditor applied compliance procedure and found that internal control is weak in these areas. For example, purchase of assets, internal control is weak. Okay, or bank reconciliation statement, periodic preparation of bank reconciliation statement, internal control is weak. So this auditor collects certain evidences. Then when applies the procedures like vouching, he finds out these are the places where transactions recordings are wrong or incorrectly recorded or there are misstatements. Or auditor applies this certain verification procedure and finds that the balance figures are misstated. So auditor collects evidences. And on the basis of these evidences which are collected, is expected to form its opinion. So ultimately he has to form an opinion. For that thing, auditor is collecting evidence through application of these procedures. Are you getting me?
Yes.
Okay. It may appear to be little technical because this is a part of auditing standards and auditing. Okay, again we'll be learning it in detail when we'll be learning auditing audit strategy and plan. At that time, audit procedures also we'll be learning in detail. At surface level, now you understand that there are something called as risk assessment procedure, which has to be applied. And there are some audit procedures which are also needs to be applied. Audit procedures can be compliance procedure, can be substantive procedure. Compliance procedures are intended to check the internal controls to see that they are actually in effect. And substantive procedures are applied to verify completeness, accuracy, and validity of financial data. Substantive procedure may involve test of details or analytical procedure. Coming to test of details, it may be test of transactions or test of balances. Okay, understood? Is it clear to you?
Yes, sir.
No. We are discussing these principles. Seventh principle is audit evidence. Now, what are these audit evidences? These are informations used by auditor in arriving at the conclusions on which auditor's opinion is based. Let us say auditor collected evidence that the revenue or the sales transactions are materially misstated. He may form an opinion that the revenue recognition is not correct. Revenue recognition amount is not showing the true and fair. So in order to form that opinion, auditor collects evidences. Right. For example, auditor collected evidences. He found that the revenue which is shown in the books of account is not reconciled with GST returns. Evidence is there. The auditor may form an opinion that this revenue recognition is not showing true and fair. And when we talk about audit evidence, it includes both information contained in the accounting records underlying the financial statement, and information obtained from other sources also, not only accounting records, but from other sources. For example, a balance confirmation certificate may be obtained from a debtor. Okay, this is not accounting information. Or let us say from income tax department website, form 26 As can be seen to see that where from money has been received. or how much amount has been received on which tax has been deducted at source. This is information collected from other sources, but they can be used as audit evidence. Okay, it's not that only accounting records, it may be collected from other sources. Okay. Now let us move to the next principle. Next principle is principle number 8. Can you read it? Number 8.
Accounting system and internal control.
Okay. Accounting system and internal control. What is the principle relating to that? Friends, please appreciate that it is the management who is responsible for maintaining an adequate accounting system. And all accounting information which should be recorded are in fact to be recorded. So what as an auditor should do? Auditors should gain an understanding and have reasonable assurance that all accounting records are actually properly maintained. Accounting system is working properly. Auditors also need to evaluate the operation of internal control system. Internal control system is actually working or not. That auditor should evaluate. Right. And how you can evaluate? By applying certain audit procedures. And these audit procedures, as you know, can be compliance procedure, can be substantive procedure. Substantive procedure can be less extensive if internal controls are relied or can be relied. Okay. In that case, what will happen if internal controls can be relied? How will you know that internal controls can be relied? Because when you have collected evidence by applying compliance procedure, you have seen that internal controls are complied with. They're working properly, nicely. Then substantive procedure may be less extensive. That means you may not go for a detailed vouching or detailed verification. But in case you find internal controls are not that reliable, you may extend the substantive procedure. Are you getting? So here I showed you compliance procedure. If you find that compliance procedures are okay or internal controls are okay, if compliance procedure application gives a good result, then substantive procedure can be less extensive. Otherwise, substantive procedure has to be very extensive. Understood? This is the link between internal control system and accounting system with audit planning or application of audit procedure. Okay, friends, did you understand? Okay. Now, let us move to the next audit procedure. In fact, next audit principle, basic principle. Number 9. Can you read it? What is the title of this principle?
Audit conclusions and reporting.
Here we'll be talking about conclusions and reporting. You have to see that the financial statements are prepared by using acceptable accounting policies, which are consistently followed. Accounting policies should be acceptable. Okay, suppose revenue has to be recognized. So we have accounting standards which discusses how revenue needs to be recognized. Let us say inventory has to be valued. We have accounting standard which talks how inventory needs to be valued or how closing stock needs to be valued. Okay, so like this. So when the financial statements are prepared, it has to be seen, or auditor has to draw a conclusion that actually it is used by applying acceptable accounting policies. And these accounting policies should have been consistently followed. Suppose this year revenue is recognized by on the basis of certain assumptions. Next year revenue is being recognized by under different assumptions. That means the accounting policies and principles are not consistent. It may be acceptable, but it may not be consistent. right? So that is what auditor has to see, that accounting policies are consistently followed and are accepted. Are you getting me? Then the financial statement must comply with relevant regulations and statutory requirements. If law requires that the financial statement has to be prepared in a particular manner or in a particular format, or some other regulations, let us say company is a listed company, there is a requirement to disclose certain things, then financial statement must disclose that. So financial statement must ensure that the relevant regulations and statutory requirements are complied with. Okay, thirdly, financial statement should give adequate disclosure of all material matters relevant for proper presentation of financial information, subject to statutory requirements where applicable. So adequate disclosure should be given. So laws, regulations, accounting standards, or Companies Act, they provide or they recommend certain disclosures. So those disclosures should have been given. Okay, so when concluding the audit and reporting, auditor has to see that accounting policies are acceptable and consistently followed, statutory requirements are complied with, and appropriate disclosures are given. These are the three things. Understood this? This is the 9th basic principle governing an audit. This is about conclusion. Okay. Now come to reporting part. How reports should be prepared, how reports should be submitted. Report should contain a clear written opinion on financial information. The opinion should be very clear. With clarity, auditors should have informed that the financial statement is showing true and fair view or not, or subject to certain things, it is given true and fair. That should be clarity. The form or content prescribed under any agreement or statute, it should be comply that requirement. If there is a specific form of reporting, for example, let us say if you see the company's report, you see most of the companies give report in the same form, because there is a specific prescribed form according to standards on auditing, that in this form audit report has to be given. It is not the requirement as per Companies Act, but it's the requirement of audit standards and auditing. Okay, the form and content as prescribed should be followed. An unqualified opinion indicates auditor's satisfaction on all material respects. Unqualified opinion means auditor is saying that the financial statement is showing true and fair view. Okay, there is no qualification to the report. That means auditor is satisfied on all material respects. But if the report is qualified, qualified means auditor is saying subject to certain items, it is showing true and fair view. That means it's normally showing true and fair view, but some exceptions are there. And when auditor gives adverse opinion, that means auditor is saying the financial statement does not give true and fair view. And in case disclaimer of opinion, auditor is saying that he is unable to express an opinion. Okay, so qualified opinion, adverse opinion, disclaimer opinion can be given, or there might be reservation of on any matter. That means auditor's opinion has to be understood in a particular context, or it is given only for a specific purpose. That is called reservation. So this kind of opinions can be given. Okay, if it is unqualified, that means clean report, then it's fine. But in case the report is modified or qualified or adverse or disclaimer or reservation, then the reason for this modification needs to be explained in the report itself. So when coming to audit reporting, we see there should be clarity and proper form and content should be followed, and the reason for modification of report must be explained. Reason for modification means when auditor is adding a qualification or giving an adverse report or giving a disclaimer of opinion. In that situation, the report should clearly explain the reasons. Is it clear to you?
Yes, sir.
Okay. Now you can think of any specific auditing situation. Now you can imagine if this principle has to be followed, then how audit can be conducted. Right. The first, as you can see, here, we started from here. We have to ensure that auditing is conducted in, with integrity, objectivity, and independence. The auditor is an independent person. He is a person of integrity, and objectively he should handle the transaction. Confidentiality needs to be maintained, and necessary skill and competence should be there to conduct an audit. And work will be performed by others, but auditor will be continued to be held responsible for that. Documentation is necessary. Through that, it can be understood that actually basic principles are followed or not. And in the context of planning also, we have seen how plans are to be designed. Okay, business has to be understood, accounting policies has to be understood, procedures has to be understood. Then the nature, extent, and timing of audit program has to be decided. Okay, then audit evidence needs to be collected. Now tell me how audit evidence will be collected? Through application of audit procedures. It can be compliance procedure or substantive. Right. The accounting system and internal control system needs to be evaluated. And finally, audit conclusions needs to be done and it has to be reported. Okay. In fact, this principle also gives us some idea that how we can move step by step. Is it not? Are you able to get a complete idea of an auditing situation? Yes or no? You have any specific query? Any query you have, any doubt? No query? Thank you then.